Hello, and welcome to another Lincoln property blog, brought to you by Ben from Walters of Lincolnshire. This week we look at the Lincoln Property Market Report for April 2026. April 2026 presents a defining moment for the Lincoln property market. Our analysis indicates that conditions have shifted significantly, creating a landscape quite different from the buoyant market many sellers anticipated just 12 months ago. The data reveals a buyer's market in Lincoln. The average property price stands at £301,278. This represents a 5.5% year-on-year decline compared to April 2025. This Lincoln Property Market Report provides essential intelligence for anyone involved in residential property decisions. Whether you're a prospective buyer seeking value, a homeowner considering a sale, or an investor evaluating opportunities, Lincoln's housing market offers compelling opportunities for those who understand current dynamics. By examining pricing data, market activity levels, and emerging trends, this report equips you with the knowledge necessary to make informed decisions in April 2026. So, what is the current market overview? The Lincoln housing market's pricing structure reveals a market in transition. The average property price of £301,278 masks considerable variation across different property types and locations throughout the city. This figure sits alongside a median price of £250,000, indicating that approximately half of all properties sell below this level, whilst the other half command higher prices. The £51,278 differential between average and median prices tells an important story. Higher value properties pull the average upward, while most transactions occur at the lower end of the range. At £232 per square foot, Lincoln property prices remain competitive compared to many UK regions, particularly when considering the quality of life and amenities the city offers. With current property listings across Lincoln currently available, the housing supply position demonstrates the substantial inventory available to potential buyers in April 2026. This level of supply fundamentally shapes the entire market dynamic and provides clear evidence of current buyer advantage. The year-on-year price change of -5.5% represents a significant shift from April 2025 to April 2026. This decline indicates sustained downward pressure on property valuations throughout the Lincoln market. The market conditions suggest that sellers who based their pricing expectations on previous year's comparables will face disappointing realities without substantial price adjustment. This negative movement is particularly notable. Given the seasonal timing, spring traditionally represents a stronger period for property sales. The fact that prices have declined despite seasonal advantages indicates deeper market challenges affecting buyer confidence and purchasing behaviour. For sellers, this trend underscores the importance of competitive pricing and realistic valuation from the outset. Properties priced optimistically for April 2026 conditions are likely to experience extended marketing periods and eventual price reductions. The Lincoln property market exhibits price variation across different property categories. Terraced houses, the most common property type in Lincoln, typically command lower valuations than semi-detached properties, which in turn sell for less than detached homes. Flat prices reflect their own distinct dynamics, influenced by leasehold structures and demand from first-time buyers and downsizers. Within the terraced house segment, properties typically range between £180,000 and £280,000, depending on location, condition, and specific features. Semi-detached properties generally fall within a £220,000 to £340,000 range, whilst detached homes typically command £300,000 to £450,000 or above. Flats and apartments tend to cluster between £120,000 and £220,000, reflecting their appeal to specific buyer demographics. These ranges reflect current market conditions and the negotiating leverage available to buyers in this market. Now let's look at housing demand and market activity. Demand levels in the Lincoln housing market are currently characterised as high, creating conditions fundamentally favourable to buyers but challenging for sellers. The average time to sell a property in Lincoln currently stands at 259 days, approximately 8.5 months, which significantly exceeds both regional and national averages. This extended marketing timeline reflects the reality that buyers have substantial choice and face no urgency in their purchasing decisions. The market conditions suggest that properties must compete intensively for buyer attention. In this environment, property condition, realistic pricing, and effective marketing become critical factors determining how quickly a property sells. Properties presenting poor value relative to comparable alternatives or requiring remedial work will likely experience marketing periods extending well beyond the 259-day average. So what is the current level of buyer interest and inquiries? Current buyer demographics in Lincoln reflect a mixed composition. First-time buyers represent a meaningful segment, though mortgage availability and affordability challenges constrain their activity levels. Families seeking to upsize or relocate to Lincoln constitute another buyer group, whilst investors pursuing the city's attractive 6.61% gross rental yield form an increasingly important segment of the market. The data demonstrates that buyer inquiry levels remain subdued despite the spring season. This pattern indicates that factors beyond seasonality are depressing demand, likely including interest rate concerns, cost of living pressures affecting affordability, and general economic uncertainty. Buyers who do engage are highly selective, often making offers significantly below asking prices and demanding concessions on property condition or included items. Lincoln currently has 926 active listings, which elevates stock levels relative to buyer demand. This inventory position provides buyers with unprecedented selection. They can view multiple properties matching their specifications and make purchasing decisions without time pressure or competition from other bidders. The abundance of available stock reflects the challenging market conditions for sellers. Properties typically require substantial marketing efforts to achieve sales, and even well-presented properties may struggle to attract offers. This inventory situation directly contributes to the extended 259-day average time to sell and reinforces the buyer's market positioning, evident throughout the Lincoln property market in April 2026. My thoughts on key property market trends in Lincoln. Several distinct trends are shaping the Lincoln property market in April 2026. Location preferences continue evolving as remote working normalizes and buyer priorities shift. Energy efficiency and property condition receive increased scrutiny given inflation concerns and cost of living pressures. Investor activity targeting rental income remains a consistent market driver, underpinned by the compelling 6.61% gross rental yield available in the city. The property market trends in Lincoln suggest a market in transition, where traditional preferences persist alongside emerging considerations reshaping buyer behaviour. Understanding these trends provides essential context for both buyers and sellers navigating current conditions. Lincoln's neighbourhoods demonstrate variable performance within the broader soft market context. Established residential areas such as Birchwood have traditionally attracted families and downsizers, though current demand across these areas remains constrained. The West End area continues appeal to professional buyers seeking period properties and established community infrastructure. The city centre location has gained increasing interest from younger professionals and investors, particularly given rental demand from university students and young professionals. Suburbs with good transport links to employment centres and superior school catchment designations continue outperforming more peripheral areas, though all neighbourhoods face the challenging market conditions evident across Lincoln property valuations. Modern buyers in Lincoln increasingly prioritise practical features reflecting contemporary lifestyles. Homeworking spaces have become standard expectations rather than desirable luxuries, particularly among professional workers. Energy efficiency, indicated by EPC ratings, receives heightened consideration as buyers calculate long-term operating costs. Properties with gardens or outdoor space command premium valuations, reflecting post-pandemic lifestyle preferences. Proximity to schools, transport infrastructure, and local amenities drives location selection. First-time buyers particularly value properties requiring minimal immediate investment, whilst investors prioritise rental income potential and property condition affecting maintenance costs. Older period properties attract specific buyer segments through their character appeal. However, they face extended marketing periods when extensive remedial work is needed. These preferences fundamentally influence which properties achieve quick sales versus those languishing on the market for extended periods. Economic factors influencing the Lincoln market. Broader economic conditions substantially influenced the Lincoln property market in April 2026. Interest rate uncertainty continues affecting buyer confidence and mortgage affordability calculations. Mortgage availability, whilst improving compared to recent tightening cycles, remains selective, with lenders applying rigorous stress testing criteria to lending decisions. Cost of living pressures constrain purchasing power even where property prices have declined. Buyers facing elevated energy bills, food costs, and general inflation may redirect resources toward immediate expenses rather than property acquisition. Employment conditions across Lincoln remain relatively stable, though regional economic growth concerns create hesitation among potential buyers regarding major financial commitments. The Bank of England's monetary policy trajectory will significantly influence market conditions throughout 2026. Interest rate reductions could stimulate demand and potentially arrest the 5.5% price decline, whilst continued stability or increases would likely extend the current buyer's market. These economic factors remain critical considerations for anyone making property decisions in the current environment. So, what are my outlook and predictions for the second half of 2026? Market conditions suggest the second half of 2026 will likely maintain broadly similar characteristics to April's market, though with potential for gradual improvement if economic conditions stabilise. The data demonstrates that structural oversupply and subdued demand are principal market drivers, factors unlikely to reverse dramatically within months. Our analysis indicates that if interest rates decline, as some economic forecasters anticipate, buyer confidence may improve during summer and autumn 2026. Seasonally, autumn typically represents a secondary peak for property transactions, though whether this will materialise in meaningful terms remains uncertain. Investors pursuing the 6.61% rental yield are likely to sustain activity, potentially providing stability to the lower-priced segments where buy-to-let purchases concentrate. Sellers should approach the second half of the year with realistic expectations regarding price achievement and marketing timelines. Properties priced competitively and presented effectively in the current quarter are most likely to sell within reasonable timeframes. Waiting for market improvement risks, extended exposure and the costs associated with 259-day average marketing periods. My conclusion and key takeaways. The April 2026 Lincoln Property Market Report demonstrates a market characterised by buyer advantage and substantial inventory. The average property price of £301,278, coupled with a 5.5% year-on-year decline, reflects challenging conditions for sellers, yet compelling opportunities for discerning buyers. For sellers, pricing competitively from the outset remains essential. The 259-day average time to sell reflects current market realities. Overpricing will result in extended marketing periods and eventual price reductions. Professional valuation and marketing support are investments well justified in this environment. For buyers, current conditions offer negotiating leverage unprecedented in recent years. The 926 active listings and low demand provide selection advantages. However, ensure thorough due diligence through professional surveys and clear understanding of all costs beyond purchase price. For investors, The 6.61% gross rental yield represents compelling returns compared to many UK regions. Soft pricing creates acquisition opportunities for buy-to-let investors willing to commit capital in a currently undervalued market. The housing market in Lincoln requires informed decision-making based on current realities rather than historical expectations. Whether you're buying, selling, or investing, professional guidance tailored to April 2026 market conditions will significantly influence outcomes. For more insights and information, visit the Lincoln Property blog at waltersproperty.com/blog. Until next time, take care. If you are thinking about selling and want an honest, evidence-based opinion on your Lincoln home's actual market value, with no fluff, no pressure, and no nonsense, I would be delighted to help. To ensure all our clients get the absolute best experience and a total marketing strategy as unique as their homes, we only list 20 properties per month. Our April and May market appraisal slots are now available to book. We ensure that you are always a name and not just a number with Walters.